So what is DisruptTech's investment thesis? What are you guys looking for?
Our mandate really is around, kind of connecting the internal and the external ecosystems, really keeping our eyes on the horizon for what's coming, introducing a lot of that technology and innovations to the business, along with being the function to drive that innovative mindset as a culture.
What are the biggest mistakes founders make when doing these financial projections at early stage startups?
Yeah, I think that they one I see a lot is being a bit. Look, I mean, I'm an optimist. I appreciate.
Yeah, I do. Say it.
But I mean, it's just real. Like the industry is slow to adopt technology, right? Our spend has not been sufficient compared to other industries. If you look at it from just a pure IT budget perspective, right? So there's some things there that where their hockey stick projections aren't necessarily going to shake out quite the way they think. And I really respect the prudence of founders that come in and say, look, like, we're going to get this to a $500 million business, but it's not going to happen in 3 years, right? It's not going to happen in 5 years.
What do you think is the right way of approaching pricing for Haskell-like contractors?
You have to be flexible. You have to be understanding in that, and you have to keep it simple, because also at the end of the day, we're helping to validate your solution so we can make a good pitch to bring you to the operations team to scale your solution in the business. And if it's too complicated on the front end, or it doesn't fit kind of the more traditional means for what we are running today, then it's just going to encounter more friction where it's unnecessary, right? Like, you don't want to lose a deal at the end of the day because our procurement team's getting frustrated. They're just like, all right, these guys are making this way complicated after 3 months. Then if we've got this much volume in there, then it goes to here. And it's like, we can't track all. We want something we understand. We like consistency and consistency across that. So yeah, but
like how much goes into purchasing technology versus investing? And maybe to add to that question, how do you decide whether to purchase versus invest?
Yeah, absolutely. Man, I wish there was a clear delineation between what the what would make that, how you could bifurcate that. But I guess it's really taking place in so many different ways. Like, for instance, I guess where I'm going is saying we have invested in capital in companies that we have yet to pilot. We have piloted companies that we have not invested in, and then we have piloted companies that we have invested in. So it's really kind of all over the place from that perspective.
So as a venture capitalist and financier, what sort of returns are you looking for when making investments? Is it 10x or 100x?
100,000x.
Yeah. So yeah, 1,000x. We'll go for that. I like that. I'll take those all day, every day. I'll take 10x. So our hurdle rate for the investments is kind of more in the 25-30 range, just realistically.
Percent.
And what's that?
Percent.
Yes.
How is technology actually used in AEC? In corporate innovations, we explore the innovation and implementation procedures used by those who actually use the tech on a day-to-day basis. Before we get started though, if you're a startup founder or operator responsible for innovation in your company, or you want a deeper, more insightful look into technology in AEC, you won't want to miss our newsletter. From deep dives into particular technologies such as AI, robotics, design, software, and so on. Hot takes from investors betting big in AEC technology, and advice on building tech companies, including the stories and takeaways of the most successful AEC technology founders. Head over to www.bricks-bytes.com and sign up today to get this exclusive material straight to your inbox. And now for the episode.
Cutler, so you're director of strategy and technology investments at DisruptTech, which is, maybe you could explain the setup between Haskell and DisruptTech, which I know you lead.
Yeah, absolutely. Thanks, guys. So DisruptTech is the CVC of the Haskell company. We're a little bit unique in the regards that we do have autonomy from the parent company of Haskell, wholly owned. and we work tightly, obviously, with the business. But what's different from kind of the CVC structure is we're doing the investment. We're doing them off balance sheet today, but on top of that, we also have coverage of innovation and R&D. So we kind of run those three kind of functions of Haskell under the DisruptTech brand. But that's kind of what makes us a little bit more unique, where typically, you're just going to be doing investing, or you're just the innovation team, or maybe you're just running R&D. So, we're kind of scrappy in that fashion. So it's pros and cons, but, I can dig into that later if you guys like.
Yeah. So Haskell is well, roughly I did some research, $1.5 billion turnover.
Yeah,
revenue.
we've grown a good bit. So we're encroaching on 3 billion top line. So yeah, and we're a global design builder, one of the pioneers as far as bringing architects, engineers, and constructors kind of all under the same roof. So our founder, Preston Haskell, also founded DBIA, so the Design Build Institute of America. And yeah, it's really been kind of pretty successful for the most part, and definitely one of the first movers in that space. But yeah, we're operating headquarters Jacksonville, Florida. We've got operations all across the U.S., mostly industrial manufacturing, aerospace, DoD, federal. We do a lot of design across all those opportunities. We do some healthcare, data centers as well. So this is kind of the core. But Latin America is another strong market for us. We've been in Mexico City for probably about 30 years. So doing projects kind of all across LATAM, and then Asia Pacific as well. We've got some operations projects kind of Philippines, Malaysia, Singapore, China. So we've got a pretty good global footprint as well.
Cutler, I'm very curious. What's the if annual growth in the top line in the business in the last few years?
Yeah, for sure. So I'm yet to have that most recent number, but let's see, we're averaging pretty significant. So 20 plus. It's been good for us. So some of that also has to do with our risk profile. So typically, not unlike a lot of others in our space, typically relatively risk averse from the projects that we are taking on, and making sure that we can execute, because that's the biggest thing for us, is making sure that we can deliver with certainty. And so the project size, typically there was kind of a mandate in the business to only take on a project of a certain size, and if it was over, I think our threshold was 250 million. And that's kind of definitely expanded, and we've gone well past that as of recent. So definitely that's contributed to a lot of our growth as well. So, and being well positioned in strong markets has obviously helped too. So yeah.
Okay, cool. So you mentioned DisruptTech as being the corporate venture capital arm of Haskell. So what is DisruptTech's investment thesis? What are you guys looking for?
Yeah, for sure. So we stood up DisruptTech in 2018. I came from outside the space. They brought me in for some of that perspective, paired me with some really smart individuals inside the business. And, our mandate really is around, kind of connecting the internal and the external ecosystems, really keeping our eyes on the horizon for what's coming, introducing a lot of that technology and innovations to the business, along with being the function to drive that innovative mindset as a culture as well. But from the investment side, our mandates, I'd say relatively broad. I mean, we're going anything from pre-seed to Series A. Anything after Series A, our checks just really aren't big enough to make much of a difference in the round size. We'll obviously, still support, follow-ons, or if there is a raise and, we have some pro rata opportunity, we'll typically always take advantage of that. But check size 500 to about $1 million a quarter is kind of our average range. So smaller player, we really want to come in, and we're it's as much for us saying, we're obviously deploying capital on good companies and behind back-end founders that we believe in, but we are also just as interested in how we can really use the business to drive opportunities for these startups, and introducing them to the parent company, getting them engaged, and from that side. So focus areas, we're kind of staying core to our markets and to the skill sets that we're delivering on today. Fortunately, that is nice, because like I mentioned, being design build, having architects, designers that think in a certain type of way, having a broad engineer base that, also thinks in a different sort of type of way. And obviously the guys getting it done in the field, right? So having all those perspectives and being able to look at everything under that canopy, which is pretty broad, right? That gives us some unique opportunities to do some cool stuff. So
yeah, and it's mostly I just got your portfolio in front of me here. We'll get to brick and mortar ventures because I think that's slightly different. But in terms of the startups that you invest in, is it mostly as a corporate venture capital for the strategic benefit of Haskell as a company?
Yeah, does Haskell need to use each of the startups in day-to-day operations or no?
yeah, that's a really interesting point. So our mandate when we first started, I made sure that was incorporated by saying like, look, we need business unit buy-in. We're going to need some level of validation from the business, preferably a pilot having been executed and some feedback so we can really come back and say, hey, from a user perspective, we validated this opportunity. This works. This makes sense. So let's also, if we feel it is a good investment opportunity, deploy the capital behind them. That shifted a bit. Not too long after we got going. I mean, the venture landscape, especially in our world, picked up quite rapidly, kind of right before COVID, kind of that 2019, and then COVID happened. There was kind of a stagnant period, but then after everybody realized that the world wasn't going to end, things ramped back up pretty rapidly. And obviously there was a lot of dry powder on the sideline from a lot of these larger funds, and the rate of deployment was very rapid. And so we rightfully, and this is part of it, right? Missing on good opportunities, but we missed on some good opportunities. And at the time, it was not for any other reason besides we were just waiting
for feedback,
complete that feedback loop, right?
Yeah.
You nailed it, Mark. So we did volley that with our investment committee and say like, look, as long as diligence checks out and we have enough conviction around what they're building and the solution, the opportunity, and the fit in the future with the business. If we can't get that feedback loop completed in time to make the call on the investment, we can still proceed without it. And I think that's been very productive for us in a fashion of being able to maintain, competitiveness and getting our, the opportunities that make sense for us, getting those deals done. So.
Money runs definitely faster. What's the how many employees do you guys have within Haskell, and what is the a structure of employment? So design, what's the design, how many employees work in design more or less, and in the build part?
Yeah, for sure. So I'll give you kind of rough numbers. And again, we've been growing at a pretty rapid pace. Some of this might be either dated or a little bit incorrect, but I'd say it's probably around, we have several hundred architects, designers. So that's probably, maybe 20% of the business or so. 30 to 40% of the business is going to be, that engineering capability skill set. So that's a kind of a cross scope. So, we have all of that capability in-house. And then from the, project management, superintendent capabilities, that really finishes out probably that remaining 40%. And then there's probably about a 10% of the business that is in specialty trades, self-perform. So we don't do a ton, but we definitely do have some skill sets in that arena. So this is kind of around specialty process piping for, like food and beverage, and there's some specialty kind of self-perform and some other kind of unique process packaging. We have an analytics, we have a healthcare consulting group. So there's kind of some other, little small opportunities kind of in there as well, but that's kind of the general breakup.
Okay. So from this breakup, which of the
27, 2,800, I think is where we're at, maybe 29 now, something like that. So
yeah, no, that's fair. But which of these types of employees have the least tech within their structure, or perhaps need more? You notice there's more need within, let's say, designers side, or?
Yeah. No, that's a good question, right? I mean, I would say that, from it's like every one of our sites has tech on the project site, right? But they ideally maybe could be using more solutions, meaning it's not like we need maybe more iPads, but we maybe need better utilization of new solutions in the field. But again, that's I don't think we're unique or anything new in that fashion.
Hey listeners, I want to take a quick break to remind you about the Bricks and Bytes newsletter. If you're interested in learning about the technology shaping the future of construction, you won't want to miss the valuable insights we share each week. To get this exclusive content delivered straight to your inbox, head over to www.bricks-bytes.com and sign up today. Link is in the show notes. Back to the show.
And then I think that it's not a matter of the technology that needs to be used across kind of design and engineering, but it's maybe a fresh look at what's out there. And, sometimes, old habits die hard, and, there's kind of people, we're human, right? We become accustomed to our comforts, and we know what we know, and we like what we know. And if it's new and unknown, we're more reluctant to use it. But again, there's been so many advances in tech in general that, it's always kind of good to, introduce new opportunities and say, hey, by the way, we know you have been using certain design software for most of your career. However, there's kind of unique aspects of a new tool out there that we'd like to show you, and you want to check it out, things like that. So, but yeah, I don't think I really answered your question. I kind of beat around the bush there, but hopefully that's kind of a descriptor, meaning it's I would say probably to answer it, it would be the field, but at the same time, I would also say that, just as much across the design engineering skill sets for new tools, right? So they're all using technology in their day-to-day, but
cool. Okay, how does DisruptTech come across new solutions? What are your sources?
Yeah, so when I first was exploring joining Haskell to take on this role at DisruptTech, pretty much the only thing that was outlined was very high level what the executive team was looking to achieve through DisruptTech and the name DisruptTech. Came in and kind of ran with that, and it's been nice because we've used that to build the brand around not only just internally but also externally, to say for internal innovations, technology, you've got a problem statement that you're trying to bring to someone that can assist. You don't have to think of, I need to go talk to Cutler, I need to go talk to Hamza, or like some individual in the business. It's like you need to go speak with DisruptTech, or this is a DisruptTech thing. So internally, it's great for us to kind of have that delineation. And then externally, that's been very helpful for us as we've continued to get that brand out in the market and the affiliation with Haskell. So it's really helped power that network. So it's a lot of other strategic partners that we collaborate with, both on the execution side. So other, engineering, design, general contractors that, maybe at the end of the day, some of my project teams might be a little bit surprised, or, like, why are you working with those guys? Like, they're, a competitor of ours. But in my world, it's like, they're not a competitor. I'm working with their innovation and venture teams. We're kind of sharing what's working, what's not, deal flow, et cetera. And obviously the broader venture ecosystem. So we work with a lot of the specialist guys that tend to be, pretty deep and have a good understanding, and have some regular cadence set up with a lot of the folks that, come on your show, et cetera. So we work with generalists as well too, but typically they're more coming to us to try to validate, the investment they're looking at, because we've already sourced it or whatnot. And we're also at all the trade shows. We've got another member of my team, Hamza Shambari. He's just an amazing guy, and he does a really good job of getting his brand out there too. So between the members of the team, we're always kind of scouting, going to the conferences, trying to stay abreast of what's going on. So this is what we live, eat, sleep, breathe every day. So
can you run us through the way you conduct due diligence on a startup?
Yeah, absolutely. So I think it depends on the lens that we're coming from. So say if it's a solution that we're looking at coming into the business, just as like, hey, we're maybe not interested in the investment. It's maybe not on the table, or some other things don't make sense for us, whether it's geography or valuation or whatever, right? And so we're just looking at piloting. That's a different level of diligence, which we still go through to validate the capabilities of the solution. Security, does it conform to all of our standards, et cetera, things like that. But from the investment side, I mean, if we're spearheading the diligence there, again, that's going to be a much more robust, robust process. But if typically, we are contributing to a larger round that's taking place, we will we'll work with the lead, validate a lot of the key points in the diligence that they've already been going through, so we don't have to, recreate the wheel from that perspective. And then, in addition to kind of go through some of the more specifics that we want to make sure, right? So, founders are who they say they are, or you guys, sometimes simple things are overlooked at times. Depends on who the investor is, but we build kind of a trust and a cadence there around that. So, yeah, it's not your standard M&A diligence, I would say, but you get what you can, right? Especially the earlier you go, you're not going to have as much of the true financial diligence to go through. You're validating more, the people that are working on it. Is the product real? Are they really doing this? They're not ex-cons, whatever the kind of standard stuff. So,
what's more at this early stages? What's more important, the product or the team?
Yeah. Well, I mean, I'd say it's team and vision. So, the product is, always important if they have it, but a lot of times they have a rough idea of what it is or a rough version of what it is. And, that can change a lot. We've seen that, over the years. So yeah, it's definitely team and vision and, validating whether that fits with, what we're looking for and what the business, is asking for in the broader market. So.
Cool. How do you the question is, how do you assess market demand? And maybe I'll just add something to that is, is it coming from the guys on site? I know you're multifaceted. You have the design and engineering teams and everything else. Or does it come from more of a broad and strategic level that determine, we're going to go looking for these solutions?
So you're asking about TAM, right?
No.
Yeah. So, I mean, look, TAM is important, right? So, it's
not the same as market demand.
No. Because the demand's coming from Haskell, right? Internally.
Yeah.
So is it the guys
got it.
Yeah, that's where I was
guys
going.
On site,
the TAM is important, right? The overall, obviously, you have to be approaching the problem from a broad statement. If not, it's something that we can build in house and just use it, in our own four walls, and that's fine. And that's still a win for us, right? That's great. But, if it's something that we're making an investment in, we need to make sure that there's a broader appetite there. And so, we do that from the field. We do that from the actual individuals doing the work day in and day out. We've got several means of how we source those and uncover those opportunities. And then also, does that align with the broader themes of where our team that's kind of looking at, horizon 2 or 3 in the future, right? Is that aligning with where the industry is going? So, solving a problem that exists today, there's value in that. That is important, and that does drive efficiency in the business, could drive more profitability, et cetera. But, you also have to keep in mind, you got to skate to where the puck is going, right? For lack of a better, old overused analogy, right? So.
Mm-hmm. Are there any particular technologies that you're looking for right now?
Yeah, I mean, I'd be remiss, right, if it wasn't the classic. I think you guys can guess the first one, AI.
Let me guess the second.
Yeah. You might could guess the second and the third too. So,
robotics.
So it's, and then it's, actually, it's funny. It is robotics autonomy. And it's automation of capture, procurement, and then, I'd say like project execution, something that, specifically I'm interested in how, project simulation on the front end can help you de-risk a project at the end of the day. But the big ones are obviously AI impacting work. How can you do more with not necessarily less, but with what you have, today. And then, we specifically, feel the challenges day in and day out around, the labor challenges and how, robotics can solve some of that, right? And the future generation of the workforce is a huge one too. So, I guess, and that leads me to another one that is, you could probably put it in the top 3, but, it's obviously, talent, workforce development from that aspect. So, and I think that's shifting, slowly but steadily, but, everybody, wants to go, work in tech or join the next greatest startup, or, go work in banking or whatever, right? And, going into construction in the field, unless they have some tie typically, or a mentor that steered them in that direction or whatnot, that's just not as commonly thought of. But what we're trying to do is really shift that lens and say, like, look, I mean, you're going to be working with some of the latest technologies that are available on market and doing some really cool stuff. So, yeah, I mean, I know we didn't go into my background very much, but, kind of financed by traditional training and whatnot, and did a lot of M&A, corporate development stuff. But software IT services was the industry that I spent most of my time in. And, it was really, really exciting. I mean, and technology obviously still very close to it, but everything we were building at the time from a software side was, it's always kind of really intangible. And the fact of what we do day in and day out with, the physical buildings that we're constructing and the impact that they have on the communities that we serve and on our industries is really impactful. And, I have a couple of young kids, and being able to, like, take them by some projects and, just say, it's not like, hey, I didn't build that, but we built that, and it's just, it's a lasting impact that it's different than a lot of other industries. So, going to workforce development and saying, like, getting this next generation interested in construction and saying, like, hey, this is where the future is. So
do you have any of those companies currently on your portfolio? Perhaps AI or robotics or future workforce? That's right. I'll keep it there.
Yeah, for sure. So from the AI side, absolutely. So Document Crunch, we were an early investor in Document Crunch, kind of in their pre-seed round, and they've been doing really well, and we're a big proponent and also user of that solution. That's been great. And from the robotics side, we don't necessarily have any investments in the space, but we are doing a lot of R&D in that space, and we own several, and we're kind of validating that in our own regard for what's going to work from that front. And then workforce solution, we've gotten close, and I'd say that it just hasn't aligned from the investment perspective, but we definitely have had success with injecting some of those solutions into the business. Skillet is one that comes to mind for kind of the trade self-perform that's been beneficial for our organization. So.
Hey, I'm dying to ask this impossible question, but what's out of this plus 20% of business growth year on year recently? Like, what do you think is attributed to tech and increase of productivity, perhaps?
Yeah, for sure. So, I'd be reluctant to probably say related to tech as it stands, right? I think it's more about innovation, and so I'd say that we have been very competitive in a lot of situations and been able to leverage what our teams have done in the field using technology to present, how we problem solve in a more innovative way than maybe some of our peers. And that's been helpful in us, continuing to not only deliver more profitably projects, but also, lock in, larger, more work with clients that we're kind of landing and expanding with. So I would say it's definitely been an important part of it. So.
Okay, dokie. I was going to ask about validation of solutions, but maybe the answer is obvious, and it's the people that are screaming the most within the organization. Is that right?
Yeah. Could you come again? What was that?
So validation of solutions. So a startup comes to you and they're like, "Oh, we've got the best thing that will lay, I don't know, drywall, for example, or bricks or whatever it is, a robot." How do you actually validate that? One, there is a need and demand from within Haskell, and two, that the value proposition is actually significant. It's not just being sold a dream.
Yeah, absolutely. Well, so I mean, we're validating the core metrics that they're building that thesis off of, right? So, if you're doing something that, you're automating a process that, maybe you're faster, but you're not cheaper. Maybe you're cheaper, but you're not faster. Maybe you're approaching a solution that is, feels like a great opportunity, and it's it's more of a feel good story than an actual like, okay, is this really practical in the field to deploy? Is this really going to be meaningful? So that's kind of some of it. The other, right, is kick the tires. So where can we actually go and visit your facility and actually engage with your manufacturing facility or with your printers or whatever it is. Can we get you on a job site? Can we get some validation from those project teams? So, and again, that's kind of where the innovation element comes in handy, and the tie to the parent company, that we have access to that. So, and I think that's what a lot of founders appreciate when they work with us, is that we will try to do everything in our power to get them on a project site, as many as possible, and get that validation from those project teams. So some positive, some not. And again, you have to kind of filter that feedback as well with a certain lens, because there's just some, there's always going to be, there's always going to be your detractors no matter what, right? And you need to understand like whether that was situational or whether that was something that, really was related to the actual opportunity that the firm's building. So
it's quite tricky to balance.
Since you mentioned metrics, so what are the core metrics that you look at from a financial success point of view when thinking of startups?
Yeah, so I mean, they need to be savvy in how they're structuring their business, how they're running their business. I think that there's it's not necessarily like it's been totally abandoned, growth at all costs kind of mentality, but I think there's been a prudent shift towards, understanding what your path to profitability looks like, and making sure you're managing, your business appropriately. So from an investment side, those are some of the kind of key things we're looking at by saying, hey, what's your burn? Do you have a path to profitability? Say, okay, great. You've raised, 150 million. That's awesome. Like what's your plan? Like how are you going to fill those shoes? Right. So, that kind of thing from our side, from when we're looking at the solutions, a lot of that translates back down into, how are they pricing? What's their go to market? Does it make sense? Does it fit? And is it reasonable? Right. We've seen, fortunately, been doing this for, just a couple years. And again, I'm still learning new things every single day, but, worked with a couple firms that, they've been uniquely positioned, and they've been working with, let's say, some very forward-thinking and very profitable owner groups that have maybe skewed their ability to understand that their solution isn't priced for the broad market. It's priced for the specific owners that they've been selling into, like high tech or whatnot, right? Where their appetite is much different than the broader market that they're going to encounter, and saying like, is this model going to work for you longer term? So some of those things for us impact by saying, okay, if it's ROI, is this, what are you going to charge us at the end of the day for the solution? And is it going to reap that value? And we try to do as much as we can to really dig into what those metrics are. And it really is case by case. So we build out an implementation plan on the front end with all the parties involved, both from the startup that we're looking to partner with and our project teams. What are we trying to achieve? What's the estimated timeline? What do we think success looks like? All that stuff. And it changes a lot over that. And a lot of these pilots go from, all right, we're going to do 60, 90 days to then it's 6 months, then it's 9 months. And, we've had some run 12 months and longer before we can make a decision, because some of those things just change and morph over time. So you kind of got to be flexible there. But, typically we're trying to tie that back to, productivity, value, those kind of core ROI traits, right? So.
And I will just ask one more on this. What are the biggest mistakes founders make when doing these financial projections at early stage startups?
Yeah, I think that they one I see a lot is being a bit. Look, I mean, I'm an optimist. I appreciate.
Yeah, I do. Say it.
But I mean, it's just real. Like the industry is slow to adopt technology, right? Our spend has not been sufficient compared to other industries if you look at it from just a pure IT budget perspective, right? So there's some things there that where their hockey stick projections aren't necessarily going to shake out quite the way they think. And I really respect the prudence of founders that come in and say, look, like, we're gonna get this to a $500 million business, but it's not going to happen in 3 years, right? It's not going to happen in 5 years. So, I appreciate that and understanding that, there is a sliding scale too, where, year 3, you will start to see that traction dramatically change from the first couple of years if you really are building something meaningful, right? So it just takes time and awareness. And, I think it's happening maybe faster than it ever has, but, and I know we've kind of, chopped it up on the side before too, but, when I first joined Haskell to lead DisruptTech, I thought the industry was going to be in a different place today than we are.
We'll get there.
Yeah.
I've saved that question
Okay. All right.
for the nearer the end. I'm very interested to hear about that, by the way.
I've got one more here.
Yeah, because I was going to move on just to the wider innovation process. So Martin, if you got more on the venture side.
So you got as you work in corporate venture capital, so you've got access to Haskell and to the venture arm of it, and obviously working with startups, seeing how they price their solutions for similar companies like Haskell and maybe Haskell as well. What do you think is the right way of approaching pricing for Haskell-like contractors?
Yeah.
It's a very broad question because I guess it depends on the type of solution as well, but whatever you can say on that.
Yeah. From a general contractor side, like more holistically, you have to keep it simple. These are broad, decentralized, organizations across project teams. So it has to be straightforward. Pretty reluctant in a lot of cases to dive too deep down into the pricing by project, by square foot and volume and even by seat in a lot of cases, right? It's just not the best fit. And saying like, hey, and we appreciate flexibility on that. And I'm not trying to rip on anybody specifically, right? This is hard. You don't really know, and it's going to vary dramatically depending on that, like you mentioned, alluded to, Martin, but you have to be flexible. You have to be understanding in that, and you have to keep it simple because also, at the end of the day, we're helping to validate your solution so we can make a good pitch to bring you to the operations team to scale your solution in the business. And if it's too complicated on the front end or it doesn't fit kind of the more traditional means for what we are running today, then it's just going to encounter more friction where it's unnecessary, right? Like you don't want to lose a deal at the end of the day because our procurement team's getting frustrated. They're just like, all right, these guys are making this way complicated after 3 months. Then if we've got this much volume in there, then it goes to here. And it's like, we can't track all, we want something we understand. We like consistency across that. So yeah, but.
Okay. Just talking about the bigger picture of innovation within Haskell as a company. Where does DisruptTech fit into it? Is it like the innovation department? Is it the spearhead, or is there like DisruptTech and then internally to Haskell, there's a separate team that runs innovation as well?
Yeah, so it is DisruptTech. So it is DisruptTech. We have specific members of the team that are heading innovation specifically. So within DisruptTech, there's clear delineation between what the team's working on and whose roles and what. But as far as innovation in the business, it is DisruptTech. So we're really helping to structure, organize, produce, and execute on our innovation program and our programming that takes place throughout the year. This is through challenges. We have an annual culmination event called the Big Pitch that we do every year that essentially brings all the various minds together from the business and says like, bring us your best idea and let's validate it. They pitched it like Shark Tank, et cetera. So that's been a successful program for us. And that's also a great way for us to work with our organization closer. So getting to know what we do, but also gets us closer to some of those problems that we might not be aware of. And in a lot of cases we aren't aware of because they're just popping up on one-offs. We've also found out that, collaboration over genius, right? So teams that we work with are more valuable in a lot of cases than an individual with one idea, because that might not be representative of the larger, problem set we're working with. But so it's DisruptTech. We've got some structure in place there, and again, it kind of helps because it is a core function of the business. We operate off kind of these 6 pillars, and one of the pillars being technology and innovation. is very core to the business. So there's a lot of support there from both the enterprise and the leadership all the way up to the board executive levels.
Yeah. And so the budget that's spent on DisruptTech is what goes into innovation, right?
Yeah, so we're operating off. We have an operating budget run two different BUs in that, and then from the investment side, we haven't gone to the route of like earmarking funds that we need to deploy or anything like that. Like I mentioned, we're making the investments off the balance sheet today, and they're really case by case. So I don't necessarily have, rightfully so, and I'm fortunate that I don't have to say, okay, at the beginning of the year we're going to deploy $3 million, right? I mean, it's just like that's not. I don't feel that's a successful way to invest. So like I said, some years we'll do. There's been a year or two where we've done no deals. There's been a year where we've done 3, et cetera. So it just kind of varies, but yeah.
Yeah, makes sense. So that was probably answers my next question would be, like how much goes into purchasing technology versus investing? And maybe to add to that question, how do you decide whether to purchase versus invest?
Yeah, absolutely. Man, I wish there was a clear delineation between what the what would make that how you could bifurcate that. But I guess it's really taking place in so many different ways. Like for instance, I guess where I'm going is saying we have invested in capital in companies that we have yet to pilot. We have piloted companies that we have not invested in, and then we have piloted companies that we have invested in. So it's really kind of all over the place from that perspective. But again, ideally, we are looking for strategic value for the business. But at the same time, if the business can't move at the right pace and we see the opportunity more broadly, and we have conviction around that, then our team has the autonomy to make an investment without that business buy-in per se. So, and again, these aren't bet the ranch checks, right? So at the end of the day, I don't want to act like they're nothing, but at the same time, we're trying to provide as much strategic value to the startup by being on their cap table as to the core parent company and leveraging the innovations that are external and bringing them in house.
So I'm looking for some numbers in this next question.
Yeah.
Is there like a dollar value you can say that Haskell, a $3 billion general contractor, spends on innovation?
Yeah. So for our group, it's a multi-million-dollar year budget a year. And this is to run those programs. This is for the pilot activity. This is supporting other initiatives that are coming up from the project teams to validate those, whether it's R&D type opportunities, things like that. So yeah.
Okay.
Cool. So Cutler, did you say how long have you been at DisruptTech? How long has it been going? So I know you obviously
6 years, 7 months.
6 years.
Yeah. Nice. There you go.
Okay,
so I joined kind of middle of the year 2018, and was kind of the official first hire of DisruptTech. So we've been going at it coming on 7 years now.
Cool. Good. Because that will nicely lead on to my next question is how has the investing and maybe landscape evolved since you first started 2018 to what it is today?
Yeah. I mean, we've seen a lot over the last 7 years, right? And I know you guys have been doing this a long time too. So, you think about, some of the trends that have emerged that, maybe got a little hot. You think modular, you think Katera, you saw that kind of rise and fall over a short period of time. Modular is by in no means going away. We have made rather large investments in that arena and are committed to that delivery model, and it makes sense in certain categories and certain markets. But yeah, I mean, this has been a trend where I think the folks that were early caught wind of those large early wins that took place in the market, and got excited, rightfully so, and said, this is the future. This is where we're going. And then it's been a bumpy road since, right? And, we've seen a lot of noise. We've seen a lot of companies not be able to deliver. We've seen a lot of acquisitions kind of come in flat, or, businesses just not make it, right? But then we have seen the growth, and there's been some breakouts. Yeah, but I think in general, the appetite has changed to technology. We've seen more of our trade partners engaging with technology as well, which has been very supportive, because in order to make these things work, right, these are complex projects across the entire value chain. So you need everybody engaged. You need everybody with that right mindset and forward thinking to really drive true change, I feel.
Mm-hmm. So as a venture capitalist and financier, what sort of returns are you looking for when making investments? Is it 10x or 100x?
100,000x.
Yeah. So,
100.
yeah, 1,000x, we'll go for that. I like that. I'll take those all day, every day. I'll take a 10x. So our hurdle rate for the investments is it's kind of more in the 25, 30 range, just, realistically.
Percent.
And what's that?
Percent.
Percent, yes.
So 25 to 30%.
Yes, on our investments from the venture side, right? I mean, we're looking for that, that 100x. But again, since we don't necessarily have a fund, we're operating a bit differently from that lens, and we're capturing the value that we're providing for the business along the way too. So, we're obviously tracking, all the markups in the portfolio and holistically how it's going across the portcos, but it's a little bit different model than that traditional VC fund. So,
Connor, is there like a time in the year where the Haskell decides to do their investments, make purchases of the technology? Is it like, we need to offset our budget and all the purchases made in December, for example, which is a very stereotypical example?
Yeah. So you're saying like time frame, or when
is there like a purchasing cycle, or is there like a period of the year where you're like actually outgoing, scouting a little bit more to try and find, and then there's a period of the year where it's a little bit more taking a step back?
Honestly, no. I mean, we're in a pretty rolling cycle here. So I mean, we'll go through. We are a part of the traditional business planning cycle, right, for annual budgets, et cetera. So we are operating off the financial calendar of the business, but at the same time, our initiatives don't really stop or start with that. So we'll be rolling a lot from the prior year in. We're always, we're revisiting what our core metrics are for our team, on a quarterly basis. But all this is kind of moving target per se. So we always have, multiple pilots going on at one time, multiple innovation projects running, and typically I've got, a deal or two in the hopper at any point in time as well. So it's really kind of rolling. So yeah, there are times that are hotter than others, right? Obviously, there's better times to do deals. There's better times to get the business's buy-in, but yeah.
Okay, I've got one here. Is there something that you disagree with regards to like where the industry is going?
Yeah, I think yes. So from a contrarian perspective, you could say that tech is a tool, right? So the over-reliance on technology is probably a big one, saying, I don't want that to seem contradictory to our vision, right? I mean, but what we're trying to do is we're trying to give our teams the tools that they need to get things done. And it's not going to be in the immediate future, at least, where tech is going to solve all of our problems, because we're such a human driven business that it's a lot that goes into that holistically. Like, and I talk about R&D and examples like our engineers, like, if you're an engineer, that's what you do all day, right? Is you're really R&Ding, you're really creating a unique solution to a specific problem that you're facing. And, that is R&D, and it's right. But, those are people-driven solutions where technology sometimes, isn't going to be the fix. But I am positive that overall we can create a structure holistically as an industry from a tech perspective that will not only make the industry more attractive to join, but also will drive more value and will continue to increase the profitability across the board, and makes us be able to execute faster, so we can continue to scale, infrastructure as our population grows and needs globally shifts.
Yeah, cool. I remember, Cutler, you hinted upon it earlier as well about you were surprised. So you came from finance, right? And
yeah,
maybe you were surprised at the progress in the construction industry. Tell us
So,
more.
part of it was being naive, right?
Right.
I was coming in, kind of a finance tech bro, right? Like, hey, it's like, how hard can it be? This is construction, right? Like, let's go rip this thing up and start anew,
Easy.
And
Yeah.
and then I got in and I just realized these things are hard. Like, these projects are not easy. There's a lot of really smart people working on this stuff. And there's just challenges that come up on a case by case, project by project basis that take time to solve. And until we can drive some more consistency in the industry, I think it's gonna be that way for some period of time. But I do feel, we've made some progress. I don't want to be, totally negative per se by any means, but I just would have anticipated there would have been a higher adoption rate. And I'm probably, there's several founders that might be listening to this right now, just like lamenting, being like, oh yeah, tell me about it. Like, why isn't everybody buying my secret sauce right now? And it's just, it's hard. We're like, just historically risk averse industry. So when you were bringing innovation inherently, if you're doing innovation right, you're doing as much right as you are wrong, and you're failing too, right? So the appetite for failure in our industry is relatively low, and rightfully so, because of a lot of the margins that we're working off of. So that's probably been a contributing factor. But I think that the broader market is finally opening up to saying, like, look, this is just part of it, and some things are going to work, some things aren't, but we have to be trying and doing more and being proactive in shifting our mindset and how we deliver. So at least that's the way it is over here at Haskell. So
I think, like when you were explaining it, what came to my head is that we will probably at some point get to the inflection point of tech adoption where the tech will be good enough for larger market participants to adopt it. And then it will be like a snowball and avalanche of adoption of construction tech. And it will be easier then for founders perhaps to sell more and to spread the technology across the industry.
Yeah, absolutely. And I think, you can even look at it from the standard tech stacks of the organizations, right? I mean, there's been a lot of these, there's really large organizations operating off some pretty legacy systems for their core business operations. And, that's a shift that's going to take place. And there's a lot of like, maybe, I think, the industry didn't really value the role of a CTO or a CIO from the tech side as they should have in the same light. So maybe there's, someone running that part of the business that's more interested in keeping the lights on and, keeping their job than, really trying to help, drive additional value for the business and the shareholders. Right. So that's kind of shifting just the mentality around tech in general. But I definitely agree with you, Martin. And I feel the way it is going to take place, it's going to, slowly and then all at once, right? So, and that's the idea that when that avalanche happens, we're waiting for it. So, and we've been preparing and we're ready, and it's part of the course for us at that point. So,
I have maybe two more questions. One will be around the investment in another fund, Brick and Mortar Ventures, and perhaps what the thinking was behind that.
Yeah, absolutely. So, that was our first investment to partner with Brick and Mortar Ventures, and I think at the time the decision was pretty clear in 2018 that their expertise and their focus on the industry specifically was they were they were and are a leader in that category, and so for us to get off the ground and really move quickly and get that traction where, it's like, they're just bringing me in. We were just bringing in other new hires. What is innovation for Haskell? We have had a program at some level, but it's going through a reinventing itself. And then what is investment? What is corporate venture for us? And so how do we get these deal flows going in? What's going on? We didn't have anybody on the team based in the Bay, all that kind of stuff. So it was like, how do we jumpstart that? And how do we find a right partner that can help us get up to speed quickly on what's going on? As well as the other LP base that they put together, good job across the construction supply chain, which is great because there's a broad mix of people to pull from and leverage insights from. So that was a good decision early on, and glad we were able to get the conviction for making that happen. So, and that's been a good partnership.
So my last one would be prediction Predictions time.
Predictions. All right, love it.
Yeah. What technology will be, or application of technology will be the hottest in 2025?
Will be, you said what now?
The hottest.
The hottest. Okay.
The hottest.
Yeah,
Which one will be breaking out like significantly?
You mean technology or company?
Technology or application of technology? Because you can answer AI, right? But okay.
Yeah. No, so
well, maybe that's the answer though.
Yeah. No, I mean,
where exactly? Where exactly?
It definitely it is AI. I think it.
All right, next one.
Yeah.
Yeah, you can't.
Yeah. All right, this guy again. Yeah. Repeat the line.
No.
Say the line. Yeah, no, but it definitely is AI because there's we've been going through this hype, right? And then there's been the delusion, and I do feel like now there's finally solutions that are being built. Us seeing how people are leaning in, not only from our business, but also from the client owner side, and and even the municipalities, right? If you look at anything from permitting and design reviews and speeding up your class detection, whatever, this stuff is very much improved and it's much more accurate and it's much more reliable than it's ever been, and it's moving faster than it ever has before. So undoubtedly, I think that's where it's at. I also think I'll go out there with another one, just throw it so it's something.
I'll go for it.
But autonomy.
We love this.
Autonomy. So, I do think that 2025 is going to be a year where we are going to see true use cases of autonomy deployed on live project sites. And there's going to be some realization around the value and the opportunity, the ROI for that. So, yeah. So, just
beautiful.
Yeah. There's definitely some interesting opportunity there. And I think it's ready. So, and you already have it today, right? You have it on mines, et cetera. I'm saying on active true construction sites, not necessarily in mining or other specific applications where there's maybe limited human interference, right? I think you're going to start seeing it on a busy, crowded job site. So we'll see. That's my bold prediction.
Very good. We love bold predictions.
We'll definitely get a short out of that.
I play it back to you every year to make sure it happens.
Yeah, right or wrong, you like.
What is the day-to-day role of someone? I guess you, a Cutler. What does it look like? What are you kind of doing? Yeah, behind your desk,
for sure. So,
out and about, etc.
if I'm not having a few interesting new introduction calls, I wouldn't be doing a good job. So typically, chatting with a new firm, new connection in the industry. Chopping on what's the latest and greatest, working with my team on, how our pilot activities are going, how our projects are receiving and running these things. There's some job site visits in there. That's obviously where we get a lot of the feedback and, getting down to the ground floor. Right. So, and then, there's just a lot of also the corporate. So where you're engaging with the other parties in the corporate, kind of following up on interesting opportunities, kind of revisiting what some of those pain points might be, that kind of stuff. So that's a little bit about it. I wish my day-to-day included maybe a bit more golf or something like that, but it's okay. Everybody's at work, right?
You'll get there, man. You'll get there.
You'll get there, yeah. So, I just think kind of at a high level, that's kind of what it looks like. So
awesome. Sounds cool.
And it's cool too. I'll just say that, we're building a little startup in our own right, and we've been building a startup with DisruptTech. So that's kind of cool too. So we can sympathize. We're using a lot of the same tools to kind of operationalize. You guys know the same thing, right? I mean, with Bricks Bytes, what you're doing, you guys kind of refining your process, how the flow works, how you guys are doing what you're doing to get better at it, right? So there's
there's a journey.
We're also building.
Yeah.
2025, watch this space.
Yeah.
Cool.
Love it.
All right, Cutler. If you could tell people where they could find out more about you, and perhaps if you have any initiatives going on at the minute you want to make people aware of, then now is your chance.
Yeah, absolutely. So you find me on, you can link to us, DisruptTech.com, or on LinkedIn. I get a lot of spam on there, so if I don't get back to you right away in the inbox, just bear with me on it. Those are probably the best. Cutler.Knupp at Haskell, always available. and where we're going to be next. I'm going to be doing some stuff over in Europe into this month, and then over in your neck of the woods in the UK early March. Probably.
Whereabouts?
What's that?
Whereabouts is that?
That's going to be the CRH Sustainable Materials Accelerators going down in March. There's an investor of a unique close group of investors that are meeting up in the Alps actually coming up in a couple weeks, so that's exciting. And then we'll be at your typical trade shows, construction startup competition. We're going to be doing that again with our partners this year as well. So kind of likelihood running across you at ENR, some Built Worlds events, Trimble, Dimensions, Procore Groundbreak, Autodesk, and the likes. So if anybody's listening and would like to connect and chop it up more, I'm happy to. So I appreciate you guys giving me some airtime here and go to the conversation.
Yeah, it was a pleasure. Thank you.
Oh,
very
it was
much.
a pleasure. Yeah, thank you, sir.